Welcome back to the ET Money Show. And now it's time to tell you what is the recommendation coming in on all your portfolio related queries, because there are a plethora of funds that are available in the market to invest your hard-earned money. But how to assess which is the right fund for your portfolio and whether or not, which are the criteria that you feel is correct for the investment that you have made, are they correct or not? To guide us all, we are being joined by Mr. Pankaj Mathpal onto the show today, who is the MD at Optima Money Managers. And also don't forget us to write to us your portfolio related queries. And quickly, if I can tell you the WhatsApp number that is flashing on right at the top of your screen, we'll be flashing it all throughout the show. And you can also email your queries onto the onto the money show @etnow.tv. But let's keep going, and let me bring and welcome Pankaj. A very good evening, Pankaj, and a very happy new year to you.
Thank you, Srishti. Good evening to you, and very happy new year to you and all our viewers.
Well, yes, thank you so much. But let's keep it going, because a lot of viewers have connected with us and they are looking for your advice on their portfolio investments. So firstly, let me take the question from Vinay. He says that he has a lump sum portfolio of rupees 5 lakhs. He also shared the names in which he has invested his money. Firstly is Axis Small Cap Fund, where he has invested 1 lakh. Another 2 lakh in SBI Small Cap Fund, and the third one he has is Parag Parikh Flexi Cap. So 2 small cap and a Flexi Cap fund, and he wants to know, should he stick to these funds for a retirement corpus of 1 crore in next 20 years? What do you feel that the law of compounding can work this well, that in the next 20 years it is enough to have 1 crore of corpus? And what's your view on that?
Yeah. So to see, first thing, he has large exposure in small cap, and all the schemes are good. But considering his 20 years investment horizon, I'll say that he can stay invested in these all funds. So even having said that, he has higher exposure in small cap, which usually I don't recommend. And it's not good for the short term, but because he has 20 years horizon, so that's why he can continue with this strategy. But as he wants to accumulate 1 crore rupees in 20 years, so with 5 lakhs, it looks difficult. If I assume 12% compounded annual growth rate, even he can expect 48 lakh rupees after 20 years. So if he wants to accumulate 1 crore rupee, then he should start SIP along with this. So if he invests 6,000 rupees per month, and with this 5 lakh rupees lump sum investment, expecting 12% CAGR, he can expect 1 crore rupees after 20 years.
Okay, so that's the advice coming in. Okay, that's the advice coming in from Vinay. But Pankaj, if you can help him with some names that are at top of your mind, or maybe looking at his portfolio where he could actually invest, some specific names will really help.
Yes. See, as he has Flexi Cap Fund and Small Cap Fund, what I suggest that he should have one large cap fund. So either ICICI Prudential Large and Mid Cap Fund he can consider, or Canara Robeco Large and Mid Cap Fund, Canara Robeco Emerging Business Fund, that he can consider. So these 2 funds I will suggest him.
Okay, but let's move on to the next query that we have, Pankaj, and that's coming from Anamika. She says that currently she is 24-year-old and her monthly income is 40,000 of rupees. She can invest a maximum of 10,000 from that in mutual funds and wants to have a corpus of 1 crore in the next 15 years. So currently she is investing in some of the funds that she has shared the names as well. Firstly, it's 2,000 rupees in HDFC Mid Cap Fund. The other one is another 2,000 in SBI Small Cap Fund and another 2,000 in SBI Nifty Index Fund. So in total, she's investing 6,000, but she has the bandwidth to make it to 10,000 in the times ahead. So should she stick to all of these funds to achieve the corpus target, and will this amount of investing, maybe close to 10,000 a month, be enough that in the next 15 years she can actually accumulate 1 crore? What's your view on that?
Yeah. So see, Anamika has one large cap fund, that is the index fund, basically large cap index fund. She has small cap, mid cap, everything in her portfolio. So definitely schemes are good, allocation is good. So she should stick to these all funds. But as far as target is concerned, if she wants to accumulate 1 crore rupees in 15 years, she should keep increasing her investment year after year. So if she wants to invest 10,000 rupees from now, then 12% every year she should increase it. And we also have a step up method in SIP where initially she can set up this STP, and every year she does not need to increase then manually. Automatically every year from the end of 12 months, then amount will increase by the rate what she had decided. So as I suggest her to increase it by 12%, either she can do it year after year on her own, or otherwise, as I said, step up SIP is one good method of doing it.
Okay, so that's the advice coming in for Anamika. Pankaj, you helped with some names that she can be looking out for to invest another 4,000.
No, I'll not suggest her to increase number of funds because she already has 4 funds in her portfolio, 3 funds I mean, but all 3 are good. So in the same funds, she should increase amount.
Thank you so much, Pankaj, for that. Well, let's move on to the next query that we have, and that's coming from Saurabh. He says that he has already invested in a fund named Tata Digital India Fund. For the last 4 years, he is investing, but in the last 2 years, the fund has given some negative returns. So should he continue his SIP in this fund or switch to some other fund, because he's already investing with a long-term horizon as of now? So he wants some suggestion that given the negative return that he's looking in his portfolio for the last 2 years, should he continue with his SIP or making a switch will be a better option to go?
The Tata Digital India Fund is a sectoral fund and investing in IT sector companies. And we have seen that there was a lot of pressure on IT sector in especially last 1 year. So my suggestion, if this is the only fund in his portfolio, then definitely he should switch to some well diversified funds, and especially flexi cap fund will be a good choice. ICICI Prudential flexi cap fund or Quant flexi cap fund can be considered. But if he has many funds and he wants my opinion only on Tata Digital, then he can continue if the allocation is say 5 to 10% of his total portfolio. So sectoral funds basically can perform during a particular time period, but for long terms, always diversified funds are better. But as I said, if in his portfolio, this is one of the funds, then he can continue with this.
Okay, so that's the advice for Saurabh, but let's move on to the next query that we have, and that's coming from Laksh Mitran, and he says that he wants to have a corpus of rupees 50 lakhs in the next 5 years. How much should his monthly SIP be to achieve the same target? And also, if he can also suggest some suitable mutual funds to achieve this target as well. So in the next 5 years, the target is to get to 50 lakhs of amount, where he should invest and how much he should invest.
See, first thing, because the investment horizon is not very long, it's only 5 years. So he should not invest in small cap funds or very aggressive funds. So I'll give some suggestion where he should invest. But first thing, if he wants to accumulate he wants to accumulate 50 lakh rupees in 5 years. So for that, some 62,000 rupees per month, he'll have to invest. And second thing, for this scheme, as I said, that he should not invest in aggressive fund. So Axis Nifty 100 Index Fund can be a good choice. Then ICICI Prudential Large and Mid Cap Fund he can consider, and Quant Multi-Asset Fund. Multi-Asset Fund means a fund which invests in equity, debt, as well as gold and silver. So this kind of funds will be better for him for this time period. And as I said, 62,000 rupees is the calculation for this target.
Okay, well, let's move on to the fifth query that we have. We have a lot of queries today, Pankaj. So the fifth one is coming from RS Sharma. And he says that he's investing in ICICI Balance Advantage Fund through SIP for the past 3 years. And he wants to know, is this the right time to invest additional lump sum in the Balance Advantage Fund, considering that the yields are expected to be high for some time now? What's your view on the rationale that he has for the investments? And should he go and add on more on a lump sum basis for the Balance Advantage Fund?
Yes, Srishti, ICICI Prudential Balance Advantage Fund is a dynamic asset allocation fund and one of the best funds in this category. So definitely he can invest, he can add more in that. Second thing, because it's a dynamic asset allocation, so you don't need to worry much about the volatility. And fund managers, they take care of this. Whenever there are more potential in equity, they increase the allocation equity. When they feel that equity is not, means time is not very favorable for the equity investment, they decrease the allocation in equity. So this is a good fund, and he should top up his investment in this fund.
So, Mr. Arish Sharma, you should top up your investment in this particular fund. But with this, we are completely out of time in this edition of The Money Show. We'll let you go on that. Pankaj, thank you so much for joining us today on ET Now and helping our viewers with their portfolio-related queries and advising them where they can go ahead and make the investment in which sort of a fund. Thank you so much.